What is going on, ladies and gentlemen? Hope you guys are doing well today and safe during these crazy times. But we have a lot to unravel today. From banks closing all over the country to stock market updates, including a theory as to why everything's crashing right now, more heat between the Ukraine and Russia, and a whole lot more. If you guys are new to the channel, it's time to change that subscribe button into a subscribed button. Don't forget to like and share this video too. And now on to the latest. US banks are closing at a record high, with Wells Fargo leading the way, shutting down 267 of their retail locations. Gerard Cassidy, head of the US Bank Equity Strategy at RBC Capital Markets, said, quote, "We anticipate that the downward trend in branches will continue for a number of years as more of the transaction-oriented aspects of banking are done digitally," end quote. Hope you guys see where this is going. And if you don't, I'll break it down for you guys a little bit later in this video. Now, the pandemic was a key precursor to the trend. Now, not saying that the digital banking didn't exist before 2020, but as we needed to be kept apart, the only logical reason was to do things online, right? Drop me a comment down below if you started ordering way more from Amazon once the pandemic hit, right? I know I wasn't the only one. I feel like I was almost on a first name basis with the FedEx and UPS drivers, but I digress. Now, it does resemble how some businesses have started hybrid shifts where employees can actually stay at home for some days of the week compared to being in the office, typically, from Monday to Friday. Now, the branch closures can also be attributed to consolidations, acquisition and merger deals in the banking department. It topped $77 billion last year. Now, this begs the question, are we set to become some kind of a cashless society soon? I'm not sure if you guys have watched those movies, but do you know the movies In Time and Ready Player One? Comment down below if you've seen those movies. Both movies had a similar way in exchanging money, none of which used cold hard cash anymore. In the movie In Time, people used time as currency and exchanged it via their arms, and you can see your balance anytime you wanted to. Somebody owes you money, you take their arm into yours and flip it around, bam, you get paid. As long as that person has the capacity to pay, of course. Same goes for Ready Player One, where gold digital coins bought everything from within the game to outside of it. A cashless society is not as far-fetched as these movies, and while it may take a little bit longer before we can actually start moving aggressively towards this, there are signs of this change. The Fed is reviewing a purely digital form of currency issued by our central bank that we can actually use freely just like cash. I know it sounds crazy, but it's true. CBDC, or Central Bank Digital Currency, has been in the airwaves for months now, expected to be released late 2021. Now, I know that that date has come and gone, but it would be a step toward a cashless future. Now, although we can expect to say goodbye to most physical banks, and just thinking about it, I can see endless hours on the phone talking to a bot if we have any complaints. Not looking forward to that. Not a good thought. Anyway, Jerome Powell, chair of the Federal Reserve, was asked about this last year, and here's what he had to say.
We think it's really important that the central bank maintain a stable currency and payment system for the public's benefit. That's one of our jobs. We also live in a time of transformational innovation around digital payments, and we need to make sure that the Fed is able to continue to deliver to the public a stable and trustworthy currency and payment system. So there's extensive private innovation, a lot of which is taking place outside the regulatory perimeter, and innovation is fantastic. Our economy runs on innovation. But where the public's money is concerned, we need to make sure that appropriate regulatory protections are in place, and today they really are not.
He goes on to discuss that while there are currencies already in place digitally, he did not name drop Bitcoin or Ethereum or Ripple, Dogecoin, or any other cryptocurrency. He also noted that a discussion paper would be out soon, but this was last year, and that PDF file is actually now available. I'll drop a link for you guys in the description down below. More on that, there's actually a feedback form available that we can all fill out. The questionnaire ranged from what might be the risks for a CBDC to a very crucial question: if cash usage declined, would it be important for the public to have access to a form of central bank money or digital currency? I'll also have a link for that in the description box down below. It's insane that they're actually crowdsourcing for this idea, but I guess getting the answers from the people would actually make a huge difference if they decide to go cashless. But what are you guys' thoughts on this? Are you for or against getting rid of your physical cash altogether? Can you imagine just not using any cash at all? I would love to hear from you guys. What are you guys' thoughts on this? Now, moving from banks to the stock market, it has been going on a particular trend lately, with prices rising within the day, only for it to go down as the trade day ends. Now, whether you have very little money in the stock market or a lot of money in the stock market, this trend is affecting everyone. Arguably, this is affecting the lower income earners of America more than any other class. But who or what is forcing this selling pressure? Now, it's hard to be completely sure, but it's for sure not the everyday trader or investor like me and you. Retail just doesn't have the power to move trades like this. Now, according to Chris Murphy, co-head of derivative strategy at Susquehanna International Group, a global trading firm, quote, "The last hour selling and the consistent selling each day does seem like institutions are done being patient and are rushing to get out," end quote. The idea is that big institutions are controlling the market, making it seem as if prices are on the way up, or fake rallies baiting retail investors to try to jump in and while the trend is upward, only for the exact same institutions or groups to dump the losses on the said retail investors. Ouch. It's not a very far-fetched idea, but it's not just the US indexes that are taking hits. Cryptocurrencies are also on a downward spiral and may soon be in a bear market. Now, just give you guys a quick heads up, a bear market is when the market is down 20% for at least a 2-month period. But a bear market is not the worst thing in the world, unless you need the cash back immediately or if you were planning to sell your shares. A bear market may also be the best time to buy stocks as stock prices are lower. Same goes for cryptocurrency. Cryptocurrency prices would be lower, so you're getting more for your money when you go to buy. But be aware of the risks and weigh them accordingly. Now may not be the best time to buy crypto unless you're willing to play the long game. And it could be a very long game. Now, as with the trend in the stock market, the prices may go back up,